Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, September 27th, 2019. I needed to do a video. I want to get this out because there's a lot of charts. I know I've had a lot of feedback from you guys recently. Prefer in the morning some charts. It's easier to look at real quick and get a bearing on the market where it's going. And I did that. You already have the 60-minute charts of NQ, QQQ, plus others, gold, some other things out there I'm watching. Right now, there's quite a bit I want to cover here. We'll just stick to the indexes. It won't be a very long video. I'll just run over these charts, things to watch for today and going forward. As I say, you have to, in trading, have your ducks in a row. Things can move fast. The bigger picture is this. Let me just digress for 1 second. And this is also a function I've been wanting to talk about this, why there haven't been a lot of swing trade ideas. Here's the market right now. Take away all these lines, levels, everything, and it's really, it's not going anywhere. There have been some micro trends, swing tradable micro trends. What I mean by that, well, there's a trading range moving sideways. In fact, almost, this is, I've covered this before. This is January of 2018. And that's a long time ago. That's not 2 years, but close to it. And the stock market is up 3%. So it's not been really much of a buy and hold market. In a year and a half, I know rates have come down recently, but sitting in a money market account since that period of time, you would have made more almost over 2 years than 3.5%. So CDs, everything else. So it's a really go nowhere market for investors. But yeah, there's been a lot of ups and downs, rips and dips, and these are the swing trade. Lately, we had this consolidation range. We did break to the upside, but again, that wasn't an actual, at least in my opinion, because once we did, you look at the breakout. If you bought the breakout, we gapped up. You had a total of 1.91% upside in SPY before it reversed. Again, because you can't, the breakout happened on a gap up. Again, I don't see the risk reward on swing positions has not been favorable. I've had a couple shorts recently. But I'm throwing out all kinds of unofficial trade ideas lately, and that's where I think the money is to be made. More of active trading is kind of where I'm going with this. Until we get some long-term sell signals, and I'm comfortable with adding on some more swing shorts, or I see anything that makes me comfortable in adding some swing long positions. They have to find some obscure sector. Right now, there's not really a sector in the S&P 500 or in the market that I think has a very good risk-reward profile. All right, let me get back to the charts here. Let's just keep this quick with the short-term charts. All right, 15-minute. No, we'll start out with the futures. Sorry, I'm kind of all over the place here. All right, this is what I posted this morning, and this is probably the most important thing on the futures charts. The NQ is this downtrend line. Remember, we have been, from this point, we had a divergent high in the NASDAQ 100, and we have been, make no mistakes about it, in a near-term downtrend. A downtrend is, again, defined as prices making a series of lower highs, which you have there, and lower lows, which so far we have up to this point, but again, these patterns, these triangle patterns go either way. Now, what I wanted to say to that is NQ broke down, and it was pretty impulsive. So, the most salient line level, whatever, on this chart is this downtrend line, because that's been, every time we've come up or near it, you've had a reversal. And now we had an impulsive rejection off that line. We've broken the uptrend line. However, it's not a clear all-in sell signal right now because of its partner in crime, the other big index, the S&P 500, or what many refer to as the stock market or the broad market, and that is right at trendline support. I could drag that down, capture that previous reaction low right there, and you can see. So there it is. Glass half empty, glass half full, and when in doubt, just sit out and see which way this goes. So there's all the reactions there, another failure at the downtrend line, and this is a symmetrical triangle pattern. These are indecision patterns. They can break either way. You really can't glean any useful information off the indicators. Back here you had a divergent low. That told us, hey, we're probably going to rally, and we did. But right now we don't have a divergent high, we don't have a divergent low, and the indicator's in the mid-range right now. And when they are, don't try to squeeze water from a rock, blood from a stone. In other words, don't try to extract any useful information, because there isn't any. So right now we're just going off price. And so what does that mean? Well, here we are. One index already broke, the tech-heavy NASDAQ 100. Remember, when tech starts breaking, tech is the biggest component of the S&P 500. It's so overweighted. People can be buying utilities and defensive stocks hand over fist, but the any downside in the tech sector will override that, or have a larger impact on the index, is what I'm trying to say. So let's see where this goes. Breakdown bearish. And again, I do these videos because things can move fast. So we've broken down on the NASDAQ. We're starting to crack on the S&P 500 as I'm doing this video. Let me show you a couple other charts. Here's a 15-minute chart of SPY. We had a pretty clean downtrend line right there. And on the S&P 500, it's tracking ETF breakout, but the breakout failed. That's pretty bearish. We take out this uptrend line, that's going to be even more bearish. So let me just give it the benefit of the doubt, move it down there. So you might want to replicate this trend line. Again, that's a 15-minute chart on SPY. There's that same trend line there. So you can see the failed breakout. Failed breakouts are bearish, but you still have trend line support. And remember, we came very close to testing the 294 level, reversed a hair shy of it. So for all intents and purposes, we tested, but we could test it again. And it is still an important support level. So you really want a pretty decent sell signal. Let's watch, see what happens here. And if you break down impulsively into that trading range, remember QQQ already fell into. This is the August trading range right here, and QQQ already entered that. So we'll watch that right there. What would be near-term bullish? Well, another recovery, breakout, impulsive break of this trend line, and let's look at QQQ. There it is. There's a trend line in QQQ. We've had a couple pops above it. You might want to extend it out a little bit like this to be safe, or you can leave it the way I had it there. And again, these are 60-minute candles. That's why you ignore the skinny part, the wick. Those are intra-period pops. Just like on a daily candlestick, if you have an intraday pop, but then you close back below, well, if you're trading a 60-minute chart, you want to look at and give a bigger weighting to a 60-minute close, not just brief pops above and below. So when I say a 60-minute close, it means when the candle is finalized and it's printed at the end of the hour. All right, so that's QQQ, but there's still a downtrend line right here that we haven't broken. So this is a little bit different triangle than what we saw on the futures right there. And so again, SPY is at support right now. Let me show you one other thing here. Okay, here's that mosaic of charts I posted yesterday. From on the left side here, these are all ES right here. These charts, and the same charts, just on different time frames: 1 minute, 5 minute, 15 minute. And same thing over here with NQ right there. You can see NQ. All right, so we had a pretty decent levels right here that we smashed through today, but we have these reaction lows that need to hold. Again, I already showed you uptrend lines there. So this may be what I'm looking at here. If ES holds that support level I just showed you, that trend line support, this could be what I refer to as a momentum fueled overshoot. In other words, when you have a lot of momentum, downward velocity going into a support level, you can overshoot it. So if we recover, you can see it here better on NQ. We're a little bit below, but futures are trying to stabilize here. If we snap back above, then we could rally today. But again, guys, we're sitting on the edge of a technical cliff. So right now, like I said, with the asset support, you can't really get aggressive on the shorts. If you have swing shorts, that's fine, but wait for a little more evidence to really bring that to a more aggressive short position. Otherwise, let's not ever lose sight of the big picture, which is this. This is the daily chart of QQQ. This is QQQ, still above major trendline resistance. Also still above, you can actually, let's see, if I look at this board here, yeah, we're right about back to the top of the trading range. Remember, this box right here, this blue box, that's the August trading range. And we dipped into it, but then we hit trendline support. And that's why you want to use multiple, support and resistance levels, and always give the benefit of the doubt. Because as I said, when QQQ entered that, SPY had yet to enter or even test at the time the top of its trading range from August. So there it is. You want to make this very simple and clear, maybe at the risk of oversimplifying it, but a sell signal would come on a big red candle like this down below that trend line. Of course, XLK, I want to see tech break as well, which would. The two are, so interrelated. The charts are almost identical when you overlap QQQ and XLK because of heavy weighting. So there's your trend lines. Also some price support right there. So you really want to see about 79.50 should put the nail in the coffin, move much below there. But otherwise, like I say, support is support until unless broken. And you got a downtrend line here that if if this market can hold up and NQ can pop that, or I'm sorry, not NQ, XLK can pop that, then it's probably going to go ahead and make that run up to a marginal new high. There might be a little bit of upside, maybe in a quick trading op. If you're nimble, you want to swing that up for a few percentage points or so. We'll just have to let the 60-minute charts be our guide, or the shorter term intraday charts. And then finally on SPY. SPY, you can see same story so far. If you take a step back from all this day-to-day noise, these price swings, if you're new to trading, and especially if you watch or trade the futures, you're probably like, wow, what big moves. It's all what I call noise. You have to attenuate, tune out that noise, and look at the bigger picture, and that is this, that right now we have nothing but like I said, would be the ideal scenario for the bulls, at least near term, maybe even longer term, to come in, back test that. We already failed here twice at that high right there, about 302. And if they can power up and then break on out and have an impulsive breakout, what has that done? Well, one thing it would have done, it worked off we were a bit overbought on that last run up there. Now, like I said, we'll still have divergence. So to me, it's not a scenario of anything's possible. I'll say that, but I don't think we're going 15-20% higher. Like I say, maybe a couple percentage points, new highs, 2-3% if that. Before a reversal, because we'd still have the divergences, but we'll have to watch. Maybe we cross back up, maybe this line moves up, and the divergences are taken out. I know that's a lot of ifs, but you have the levels. To me, it's simple. I'm not going to sit here and tell you that the market must do this or must do this. We'll know, we'll have a better idea if we see this. We see a solid break below 294. We see a break of this trend line. We see a break of XLK, QQQ. Then it's time to get short, and I'm going to wrap it up with this. We're only at the 12-minute mark. One thing, and there are no guarantees, and I don't want to sound dramatic here, but traded long enough to tell you this. This is a powder keg. This market is a powder keg. Of overvalued, overextended run, just bearish technicals that have been building. If and when the floodgates break, when the dam breaks, it can be very fast, very fast. If you haven't traded in a while, this market could drop 10% in a matter of a couple days, 2-3 days, and you have to be ready to jump on it. I can't always get those levels out. And that's why I do these videos in advance. I can't get the, screenshot charts, manage my own positions. I'll do my best, but, that's all I'm trying to say is here. I'm not, that breakdown can come today, or it could come weeks or even months from now. So let's leave it here. What we're going to do today, we're starting to get back above those levels I just showed you. We're holding that trend line on ES. So we probably could pop here, and let's see if we pop. ES runs back up. Remember, we still have downtrend line resistance. The more that downtrend line is tagged, the more validated it is, and then the more likely we are to rally pretty hard after it if it does break to the upside. And likewise, if we break to the downside, we've had yet another reaction now. And so this is how technical analysis works. This is how my trend lines work. This all factors in. The more reactions you have on a trend line, the more valid it is. And therefore, when it breaks, the more likely you are to see impulsive selling or buying. Why? Well, one reason, this is in my head, I don't know, it's not in the textbooks, but I imagine the more reactions you have, the more obvious it becomes to the masses. And therefore, the more traders watching a trend line, the more likely they are to go long on a breakout or cover their shorts on a breakout, or vice versa down here. So that's that. So right now, we have the early makings of a uptrend line. All right, I'm going to wrap it up here, get it out to you guys, and we'll see. And at the end of the day, keep things light. I don't see today. Today could go either way. We can close up, we can close down. I don't have a strong opinion right now, but I showed you if we do break down, and I said this earlier on that post for gold. I mean, this is probably one of the best looking trades today. There are no guarantees it's going to play out, and if that level breaks, it's like that Bitcoin. Remember, I showed you a big level on Bitcoin, posted just over 3 weeks ago. Said Bitcoin's poised to drop at least 25% because it was such an important technical level, and it was a lot in the charts. Gold's the same way. So don't get me wrong. I put out these setups, and I think it's objective. I showed you a falling wedge right there. I showed you bullish divergence. This is why I like gold here. I think it's a very objective long with a nice risk reward, but don't get married to it, because what'll happen if the stock market turns around and rallies hard off these trend lines, starts to continue up, the flight to safety bid will probably come out of gold. It can break that level, and it would probably be a pretty swift drop down to either or both of these support levels below. That'd be a pretty good sized drop on gold. But if the market breaks down, or even just continues to flounder around as it has been lately, the buyers might come back into gold here. They certainly stepped in today. Like I said, a little more work to be done. If you went in today, or you still go in now, it's not too far above 1492. Then your next buy signal is on a breakout above that falling wedge pattern, and this would be confirmed divergence. So we get a bullish crossover there, we'd have that divergence confirmed, and so you'd want to look for then a breakout of that, and at least up here. That would be my minimum target if we broke out 1512, but possibly more. And a couple ways to trade it: either try to take the quick buck. I know at least one person in the trading room did today. They caught the bounce off there, sold, and said they've covered their membership for 6 months, or just trail it up. If you get a good entry in gold and you believe gold's in a longer term bull market, and it may eventually go on to break above this big old trading range that it's been in for the last few months, then you have a good entry here, and it might, zigs and zags aside, it might continue to work its way up and finally break out. So a lot of ways to trade, and I'll continue to update this. That's one thing you can count on: stock market updates, and at least for the foreseeable future, pretty frequent updates on gold and the precious metals. We will wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.